fact that Japanese companies going forth will be paying higher dividends is of course very attractive to Japanese institutional investors, in particular the pension plans, because with an aging population, their obligations to pensioners are rising. Interestingly, in this context, it's also important to emphasize that with a move out of deflation into more normal inflation, the major investors in Japan, which include the GPIF, which is the Government Employees Pension Plan, which is the largest in the world. It's even larger than CalSTRS and CalPERS in California, the Post Office Employees Pension Plan, and a number of other government pension plans. These will make a massive move in terms of reducing their exposure to bonds, which was the right thing to have had in their portfolios during a deflationary period. But clearly, if you enter a more normal environment of rising prices, where we will see interest rates rise for the good reasons that I referred to, and we see corporate profits pick up, the prospects for the stock market become very, very attractive relative to the bond market. These big pension plans have had a very low exposure to equities, as low as 5%. And over not the next few months, because we're talking about not millions of dollars, we're talking about trillions of dollars. Trillions of dollars are going to be transferred from the Japanese bond market to the Japanese equity market by these institutions. This will take probably 2 or 3 years to complete. And this will mean that the Japanese market is going to benefit from the tailwind of constant, steady buying by these funds. In the current environment in Japan, where we think the most attractive investments lie are in those industries which are going to benefit from a reflation of the Japanese economy. So in the portfolio, the biggest exposure in Japan is in the real estate sector. There are a group of first-class Japanese companies, the Japanese banking sector, because the Japanese banking industry has been restructured as they've gone through their crisis. There are now 3 dominant banks, and as economic activity picks up, loan growth picks up, margin spreads widen, these companies are poised to enter a period of very substantial growth. Exposure to retail as incomes and expenditure picks up, and exposure to the robotics industry in the form of Fanuc. Those are the areas which we think are the most attractive.